Hello, everyone. This is Coach Wade, and welcome back to Kingdom Credit Masters, where we're helping families move from crisis to recovery to prosperity when it comes to their everyday financial life. Today's video, we're going to talk about the 5 parts that make up your credit score. Okay, that's the 5 parts that make up your credit score. And those 5 parts are going to be payment history, utilization, which may be also classified as amounts owed, new credit, which we call inquiries, length of credit history, and types of credit used. Okay, so let's go ahead and break this down for you. So when it comes to your payment history makes up 35% of your score. And what payment history is basically looking at the most recent 24 months. Are you paying your bills on time? Do you have delinquencies? Do you have charge-offs? That kind of a deal. So having a good payment history, paying your debts on time, makes up 35% of your credit score. Okay, so a lot of times people stop right there. They don't go any further. They stop at the 35% and thinking they're going to make a big difference with their credit score. But what about the remaining 65% of your credit score? That's a bigger chunk. If you look at the whole, looking at the 65% versus the 35%. But what makes up that 65%? 30% of that 65% is going to make up the amounts owed, which we call, i.e., credit utilization. So when it comes to utilization, the ideal number is to keep it at 30% or less. Okay, so for example, you have $1,000 credit card. You want to make sure you keep the balance at $300 or less. Okay, don't have it going more. The lower the better. So you can go lower than 30%. You just don't want to go above 30%. Reason being, because now you're starting to impact your credit score, and utilization makes up 30%. A lot of times people think that utilization just pertains to credit cards. That's not always necessarily the case. Also, utilization takes into account if you're buying a new vehicle. Say you bought it for $50,000. That's a purchase price, and then the balance of it is $50,000. So that's utilization as well. Whenever your beginning balance, it's pretty much relatively same as your current balance. That's high utilization, okay, until it's being paid down. So that's why sometimes people are like, I just bought a car and it dropped my score so many points. So it's not just the inquiry, it's also impacts your utilization as well. Okay, so that's how sometimes you can see your score drop a little bit. All right, and then 15% is going to be your length of credit history. How old are your trade lines? That's why it's always good not to close your credit card accounts after you pay them off, because it can impact your average age. It can also impact your overall utilization. We're looking at your total available balance in relation to the balances that you have on your revolving accounts. Okay, so 15% is going to be length of credit history. All right, 10% is going to be, inquiries. Okay, it's going to be inquiries. So 10% is going to be inquiries, i.e. new credit. So every time you do an inquiry on your credit report, it can possibly ding you. The rule of thumb is, the 524 rule, where you don't want to do more than 5 inquiries in a rolling 24-month period of time, because if it doesn't really slam your score, some banks have it built into their system to automatically decline you, irregardless of what your score is, if you have too many inquiries. So yes, people can be declined, but too many inquiries and still have a 700 plus credit score. All right, so always keep that in mind, and so be judicious anytime you have somebody pulling your credit. So just don't let anybody pull your credit willy-nilly. Anytime you pull it, be sure that's what you want to go with. So kind of get an estimate of rates before you actually try to pull it. Do your comparison that way. All right, so we got that part. We got the history. We got amounts owed, which we call utilization. We got length of credit history. We got new credit. All right, in the yellow, and then the last 10% is going to be the types of credit used. That's where your credit mix. Okay, so your credit mix is going to be installment accounts versus revolving accounts. You want to have a good little mixture. You don't want to have it all installments. You don't want to have it all revolving. Installment accounts are things such as your car loans, your mortgage loans, your personal loans, where you have a set payment and you have a set payoff date and you have a set term. Those are installment loans. Revolving loans is like you can use the money, pay it back, and use it again. So it's revolving, okay, like a revolving door. So that's the difference. So that credit mix makes up 10%. So we got 35% is payment history. Just to recap, 30% is going to be utilization. 15% is going to be the average age of your credit file. 10% is going to be inquiry, or i.e. new credit. And 10% is going to be your credit mix, i.e. types of credit used. But folks, that concludes what makes up the 5 parts of your credit score. So put this to memory. So keep this in mind when you're starting your own personal credit repair journey. Keep in mind the 5 parts that make up your credit score. You'll see that right up in this area right here. You'll see this information, this little pie chart. Be sure to utilize that for yourself. It's all about gaining knowledge, folks. The more we know, the better we can do. So if you know better, you do better. If you don't know better, you can't do better. So this may seem simple for many folks, but some folks aren't aware of the 5 parts that make up credit score. Some of you guys are probably already on top of it. You already know what makes up the 5 parts. But for those of you who don't, hopefully you're able to obtain some information from this particular video. So be sure to like, share, and subscribe. Until we meet again, you guys have an amazing day.